Yes guys, so let's discuss about accounting standards now. Well, there are various sets of accounting standards. The first thing that we need to talk about, what is an accounting standard and why do we need it? The problem what came up was regarding accounting policies. When there were accounting policies being framed, what does an accounting policy say? Accounting policy is selected based on the company and the management has a right to select whatever accounting policy they want. Like take inventory valuation, they can use either FIFO or a LIFO basis or a weighted average basis. For a depreciation, you use SLM, WDV, or you use any weighted average depreciations or machine hour rate. There are plenty of other accounting policies that can be followed. But to standardize everything so that there can be a comparability between two financial statements, we have framed something called as accounting standards. Now what are the different set of accounting standards? We have Indian gaps that we normally call it as accounting standards. 32 accounting standards and Indian gaps. But now came the convergence with IND-AS. Your IND-AS is a convergence of IFRS. These are 39 in number. So 7 additional standards which are coming up. Actually 9 additional standards because there are 2 other standards which have been withdrawn. And something else called as US gaps. To put it in a simpler sense, I'd say US GAAP is a base document. That means the first person who comes up with any particular standard is the US GAAP, which is adopted internationally by the International Accounting Standards, IAS board or the IFRS board. Now, International Accounting Standards and IFRS, both we call it as the same set, IAS and IFRS. This IAS and IFRS had to be converged with the Indian gaps and they have formed something called as IND-AS. So, IND-AS is basically a convergence of both IFRS as well as Indian gaps. We are bringing the Indian gaps in line with IFRS now. So that is called as IND-AS now. As far as our applicability is concerned, we have this 32 standards applicable to all. Plus, for the exam perspective, we have a comparison between Indian gaps and IND-AS. Earlier, there were portions which covered Indian gaps in comparison with IFRS and US gaps, which is not there anymore. Now what we have is a comparison only between Indian gaps and IND-AS. Now understand, there's not significant differences when you talk about IND-AS and IFRS. There's not significant difference because since we are calling it as a convergence, it basically indicates that majority of the provisions of IFRS and IND-AS have been the same. So that is how we are saying that we'll only discuss about the differences between Indian gaps and IND-AS. So my lecture will start with Indian gaps and then towards the end we'll also discuss about what is the comparison between Indian gaps and IND-AS. Now, is there a significant difference when you talk about Indian gaps and IND-AS? Yes. Especially when it comes to the beginning standards, that is 1 to 15 standards which are called as the first generation standards, there's a lot of difference when we are talking about Indian gaps and IND-AS. Like for example to cite with, if you are aware of the standards, we had something called as extraordinary item as per AS4. Well, AS5. AS5 was talking about net profit or loss for the period and in which we had to report profit from ordinary activities and profit from extraordinary activities separately. Well, the problem is now IND-AS does not define even extraordinary activity. That means, in simple sense, IND-AS says any activity which the business does is always ordinary. There cannot be an extraordinary event that occurs in the course of a business. So that is what he started doing. So what happens when you start reporting a P&L in Indian gaps? We had ordinary activities, extraordinary activities, prior period items and so on. But when it comes to IND-AS, we don't have such things. In a similar way, let's say there was a particular error or an omission that you have done back 3-4 years back. Now today, if you have identified that error, according to your Indian gaps, he says that just record it in the current year as prior period item and leave it. You don't have to go back to the year in which you have made the error and start rectifying the error. That was not required at all. But Indian GAAP does require it. What he says is, if you have made an error in the past years, then you have to go back to the past year and start rectifying the error. But Here also it is not possible for me to identify an error 15 years back and start recording that. So what he said is at least 3 years period. At least 3 years period you have to go behind and you have to start rectifying the mistake and come down to the current year. You cannot record it in the current year as a prior period item. So that concept of prior period item is also gone. So in short I can put it as that entire AS file is eliminated now. Now this is how there are certain changes which are quite radical when you talk about both Indian gaps as well as IND-AS. Now these differences are normally existing. These significant differences are existing only between Indian gaps 1 to 15. That is up to employee benefits. Subsequent upon 16 and all, they are recent standards. They are second generation standards which are basically an adaptation of IFRS. They were initially an adaptation of IFRS, adjusted, edited here and there, Control C, Control V and Control P. So basically there are certain changes which they have done, but those changes we'll discuss about it, but they are not significant changes. There haven't been really significant changes when you talk about 16 standard onwards to 32 standards. So let's discuss about what are these accounting standards and whom are they applicable to and how do we apply these standards in preparation of financial statements. Without understanding the applicability, I can't start understanding the standard. The simple reason is, let's say we have completed all the standards and we have got good enough knowledge as far as the standards and their application is concerned. I can't go to a retail shop fellow who is not even having a turnover of 1 lakh or 2 to start and force him to start applying standards. That is not possible. Now you need to know where to apply the standard and where not to apply a particular standard. So the first thing that we'll have to discuss about is the applicability of standards. For the purpose of applicability of a standard, we don't call it as a company or a proprietorship or a partnership. There's nothing a word used like that. If anyone is of an impression that accounting standards are applicable only to companies, absolutely wrong. Because whenever we discuss about a standard, there's no word as a company, proprietorship, partnership, anything being used. Only one word which is being used is called as enterprise. Now let's understand why this word enterprise was used. When I use the word enterprise, it is irrespective of its legal form. When I said irrespective of legal form, that means I have included partnership, proprietorship, company, limited liability partnership, one-man company, a trust, cooperative society. You can name anything. You can name any form of organization. Everyone is included in one broad term, that is an enterprise. In simple sense, I can say that accounting standards are applicable to enterprises, be it of any legal form. Be it of any legal form, that is even cooperative societies and trusts also have to be brought into the ambit of accounting standards. But however, I can't apply all the standards to every enterprise existing. So these enterprises, for the purpose of applicability of the standards, are divided into 3 broad categories. The first category is called as level 1. The second category is called as a level 2 enterprise. And obviously the third level of a category is called as level 3 enterprise. 3 levels of enterprises have been mentioned now to understand what standards are applicable to what kind of an enterprise. So when I use the word enterprise, I am classifying them into levels and we'll discuss about how is it applicable to each level. Now the easiest first is, I'll discuss first, that is level 3. I can say that level 3 is anything other than level 1 and level 2. Anything other than these 2 levels are a residual category of level 3 enterprises. Like I said, that is the easiest to understand. But to identify an organization to level 3, first we need to see that whether they can be classified under level 1 or level 2 category. So let's discuss in stretch what is a level 1 category and what is a level 2 category. The first one we'll discuss about is a level 1 category. The first one to start with, any enterprise listed or in the process of listing its securities in India or outside India. Might have only 10 words guys in the first classification, but there's a lot of analysis that we have to understand in the first category itself. Any enterprise that is listed or in the process of listing its securities either in India or outside India. Now first come to this. What does the word securities mean? Securities mean either it could be an equity security or preference, or it can also be in debt. What are debt securities? Debt securities are debentures and bonds. Equity shares, preference shares, debentures and bonds. Everything included in the word securities itself. Any enterprise that is listed or in the process of listing. Now whenever I am using the word listed, that listing word, whatever is used here, you need to associate it with a stock exchange. So whenever I am using the word listed or listing, I am talking about stock exchanges. So this word listed can be associated with a stock exchange. So any enterprise which is traded on a stock exchange, I can say that it is being listed. Now, whenever I am talking about a listing or a non-listing agreements on a stock exchange, there are two types of stock exchanges in India. One is a recognized stock exchange, other one is an unrecognized stock exchanges. Your recognized stock exchanges, you can take it as NSE, BSE, MCX. There are plenty of indices which are called as listed stock exchanges which are recognized. They are recognized stock exchanges. Other than this, you also have a few unrecognized stock exchange. We also have a Hyderabad stock exchange which is an unrecognized one. So whenever I am using the word stock exchanges, it can be either a recognized stock exchange or unrecognized. Either a recognized or an unrecognized stock exchange. Understand guys, he is trying to include as many number of companies possible under level 1 category by using the words listed or in the process of listing. So when I'm using the word stock exchange, it can be a listed, a recognized stock exchange or an unrecognized stock exchange. When you use the word security, equity securities, preference securities, debt securities, whatever it is. Now here comes in the process, what is this in process of listing? How can you call an enterprise as in the process of listing? Now normally what happens is, for the listing process to complete, the first thing that we need is a resolution from the shareholders. Yes, a special resolution from the shareholders which is passed on to the Securities and Exchange Board of India, that we normally call it as a SEBI, and SEBI gives you an approval. From the time SEBI gives you an approval, you can draft a prospectus, you can invite the public to subscribe for the shares or debentures, whatever it is. But understand that the SEBI, once it gives an approval, he says that my approval is valid for a period of 1 year. Now 1 year from what date? 1 year from the date on which he has passed the resolution. So 1 year from the date on which he has passed the resolution, he is entitled to list the company. But if let's say the approval was received exactly on 15th of August, that means his validity of such a approval from SEBI is up to the next 15th of August. That means, let's say there's a 31st March which is coming in between exactly, which is a balance sheet date, and the listing process was not yet complete. So I'll say that since he has already obtained a SEBI approval and since already necessary resolution was passed, I will call such companies as in the process of listing. So something in the process of listing, its securities either in India or outside India. So not just stock exchanges in India, but also outside India. Is it really important? Yes. There are plenty of enterprises which have businesses in India, but still they are not listed in India. You can take Facebook. Facebook is having some business enterprise in India. It has an establishment in India. It's conducting businesses in India. It has office in India, but still it is not a listed company in India. It is listed somewhere else. Microsoft, Google, you name any company, Apple. Most of us use an Apple product. Now Apple is not a company which is listed in India, but it still has business in India. So you can name multiple companies. After 1991, the liberalization scheme, there are plenty of global companies which have entered into India and started conducting their businesses. And these companies are not listed as a part of India. They must be listed somewhere else. Now all these companies which I have named, Bank of America, Wells Fargo banks, all these are basically listed on NYSE, New York Stock Exchange. So basically we don't have those companies listed in India. So I'm including even those companies by saying that either it can be a listed company in India or outside India. So understand, my first point itself covers majority of companies. He just did not restrict his definition by just saying that it is in India or only companies which are listed or only equity securities. Nothing. He just said any enterprise, be it listed or in the process of listing, and such listing either in India or outside India. If such securities can be equity securities, preference securities or debt securities, I'll call it as level 1 enterprise. Now come to the second one. This is based on the business where he says banking, insurance, and financial institutions. So any enterprise conducting these three activities, I will call it as level 1 enterprise. I will not have to see about any other thing. You are conducting the banking activities or insurance or financial institutions, you are level 1 category. Banking need not be always by a company, can also be by cooperative societies and trusts. We have plenty of cooperative society banks which are running, which will be classified as level 1 category again. Plenty of private financial institutions have come up, guys, which are included under level 1 category now. So any enterprise conducting the activities of banking, insurance and financial institutions will be included under the level 1 category. Now starting with point number C, going up to point number D. So C and D are two basic criteria which are called as quantitative criterion. These are qualitative criterion based on what is the quality of the institution, whether it is listed or not listed, whether it is conducting these activities or not. But now we come down to figures. We come down to amounts now. My third one is talking about turnover. My third one is talking about turnover. And the fourth one talks about borrowings. Two quantitative criteria which will come up. And major testing of anything in the exam happens between these 2 points. C and D are the major points which are normally tested as far as the exams are concerned. There are some qualitative criterions. We have to establish something here. Turnover. When I talk about turnover, I'm excluding other income. Now what is other income basically? When I use the word other income, this other income is nothing but non-operating income. So let's say we are running a software company and we are receiving a paper in my office every day. At the end of each month, all the papers piled up have been sold away for a certain amount. That amount we call it as other income. That cannot be called as your operating income by any chance. So by the word turnover, we only mean operating incomes. Now such operating profits, if the turnover exceeds 50 crores, in the immediately preceding financial year, if the turnover exceeds 50 crores in the immediately preceding financial year, then I'll call it as a level 1 enterprise. Such turnover, when we calculate, we need to exclude your other income or the non-operating incomes. Interest on securities, dividend received on shares, all these are non-operating activities unless it is an investment company. If it is an investment company, then they should be included in the turnover, interest and dividend income. Otherwise, normally interest and dividend income for any other enterprise should be an exclusion in computing your turnover. Now, let's talk about borrowings. He says borrowing should include public deposits. Deposits accepted from the public, or you can even include your debentures, include your bonds. Anything which is a long-term source of fund is a borrowing. So talking about borrowing, he says, if the borrowings exceed 10 crores, in the immediately preceding financial year, then I'll call it as a level 1 category. Observe these two statements carefully. The words which are repeated are immediately preceding financial year in both cases. While turnover is expecting it to exceed 50 crores, borrowings are expected to exceed 10 crores to be called as a level 1 category. Now here comes the problem. When I'm talking about immediately preceding financial year, that means, let's say a company in 2013-14 has achieved a turnover of 54 crores, while in the previous year he did not have more than 50 crores. Exactly in 2013-14 he exceeded this limit. So this threshold was crossed in 2013-14. I cannot call him as a level 1 category for the year 2013-14. Because he said it should exceed 50 crores in the immediately preceding financial year. To call it as a level 1 category in 2013-14, what was the immediately preceding financial year? 12-13. So you need to check whether he has exceeded that 50 crore threshold in the year 12-13 or not. But normally if he says that no, then even though you are crossing that 50 crore threshold in the current year, I am still not called as level 1 category. I will be called as a level 1 category from the subsequent year. That is from the year 2014-15. I'll be classified as level 1 category. Same thing applies even for the borrowings, but a very, very peculiar concept as far as the borrowings is concerned. Let's say he says the borrowings are $9.4 crores on 31st March 2015. He's asking you to classify whether this is a level 1 category or not. Now, looking at this 9.4 crores, comparing with the threshold of 10 crores, I will say that this is not a level 1 category. Answer is absolutely wrong. Because when he said borrowings exceed 10 crores in the immediately preceding financial year, he never said on the balance sheet date. So whenever you are checking for this 10 crores threshold, check for each day of the preceding financial year. Each day of the preceding financial year, in the sense, let's say in the previous year, a particular date, let's say on 16th of January 2015, it was 10.1 crores, after which he paid back 0.4 crores, bringing it down to again 9.7 crores immediately. But understand, at a particular point of time, it was 10.1 crores, so my borrowings has exceeded the threshold on one particular day in the immediately preceding financial year. I'll have to call it as a level 1 category. There's no particular date which he is mentioning. He never said on the balance sheet date. So each day of the immediate preceding financial year should be considered. Let us say we have a situation like this. On 12th February, borrowing was 9.7 crores. There's some interest accrued or interest outstanding on this, 0.4 crores. Total is 10.1 crores. Can I call it as a level 1 category in the subsequent year? Because actually the borrowing was only 9.7, but including the value of the interest, the borrowing has totaled 10.1 crores. Can I still call it as a level 1 category? Yes. When he says borrowing, I have to include even the interest due but not paid. So includes public deposits and also includes interest due but not paid. Let us say it is a monthly interest, then the interest is due at the end of each month. If it is a quarterly interest, interest is due at the end of each quarter. So basically, let's say I have a situation like this. My quarter 1, quarter 2 and quarter 3 or quarter 4. Let's talk about like this. Interest is due at the end of each quarter. During the period of Q2, where I have 3 months, after 2 months I cannot say that the interest is due for 2 months. Interest is not due. Interest is accrued for 2 months, but it is not due. Interest falls due only at the end of the quarter. Interest falls due only at the end of the quarter. Let's say my interest payment dates are always on 30th June. Yearly once only I'll pay. Annual interest, one time I'll pay the interest only on 30th June. Balance sheet date start falling on 31st March. Then I cannot say interest due from last year 1st July up to 31st March on the balance sheet day, interest is not due. Interest is accrued and is not due. When does it fall due? It falls due again on 30th June. Interest which is not due cannot be included as a borrowing, but interest due should be included in the borrowings. So be very careful with the difference between interest due and interest not due. Yes guys, the last point under level 1 enterprises, holding or subsidiary of an enterprise satisfying above conditions holding or subsidiary of an enterprise satisfying above conditions. Try to understand that statement guys. Yes guys, what do you understand by this holding or subsidiary of any enterprise satisfying the above condition? So in general sense, if I say I have a holding company which is a level 1 category, already satisfied the above condition, so my subsidiaries S1 and S2, I don't have to check whether it satisfies the above conditions or not. This level 1 category will be carried forward to my other two subsidiaries as well. Vice versa. So that means I can say if subsidiary S1 is a level 1 category, then I'll say that the holding will take this level 1 category status irrespective of whatever was the turnover or the borrowings or any of the condition. I don't have to check for it. Let's say my holding company has one more subsidiary S2. Since holding company is a level 1 category, my S2 should also be level 1 category. This is absolutely wrong. I can't take that. Understand? If my one subsidiary S1 was a level 1 category, then the same level 1 category should be adopted even for the holding company, because the point said holding or subsidiary of any enterprise satisfying the above condition. Since S1 satisfied the above condition, I can take holding company as level 1 category. But I cannot apply the same status to my subsidiary S2 because holding was level 1 not because of satisfying the above conditions. Holding was level 1 by virtue of last condition. It cannot transfer its level 1 status to other subsidiaries at all unless and until it satisfies the above conditions. The sentence did not leave it at holding or subsidiary of any enterprise which is level 1. He said holding or subsidiary of any enterprise satisfying above conditions. That means if someone acquires a level 1 status by virtue of the last condition, he cannot transfer his level 1 status to either its holding companies or its subsidiaries. Because very clearly one word which is being excluded from this, holding and subsidiary, these two companies are basically called as co-subsidiaries. So the word he has excluded or removed from this is co-subsidiaries. So excludes co-subsidiaries. It excludes co-subsidiaries, guys. Yes guys, then what is level 2 category and what is level 3 category? Like I already seen, level 3 category is anything other than level 1 and level 2. Then what is this level 2 categories? To be classified as level 2, something which is not level 1, lower than level 1, the 3 points that we have to consider is only C, D, E. There is no corresponding points to A and B. That means even for level 2 category we have to talk about turnover. This will become the first point now. What did we say? Turnover excluding their other income, which is nothing but a non-operating income. If it exceeds 50 crores in the immediate preceding financial year, it is level 1. So anything more than 50 we have discussed as level 1. So obviously anything which is less than or equal to 50 crores should be level 2 category, because equal to is also not there. I said greater than, so I am putting less than or equal to 50 crores as far as level 2 is concerned. But even 1 rupee is also less than or equal to 50 crores. So there should be a lower limit as well. There is a higher limit. The upper ceiling is 50. Then the lower ceiling here is 1 crore. This lower ceiling is always a moving one. The lower ceiling always moves with respect to section 44 AB of Companies Act, of Income Tax Act. What is that? Tax audit section. So in the tax audit limit, whatever is there, earlier it was 40 lakhs, then became 60 lakhs, then became 1 crore. Same way even level 2 also increases. So it was basically 40, then it came up to 60, now it is 1 crore. So if next year if it has increased it to 1.2, then even your level 2 category will also change. So how do I read this? Turnover excluding other income. If it is less than equal to 50 crores but exceeds 1 crores in the immediately preceding financial year, I'll call it as level 2 category. Similarly for borrowings also we have to see. Borrowings exceeding 10 crores, level 1. So less than equal to 10 crores should be level 2. Again same way, upper ceiling I have, lower ceiling I need. Lower ceiling is the same now, 1 crore. That is a constant lower ceiling guys, it never moves. Only the turnover part keeps on changing. My last condition as it is, it should be holding or a subsidiary satisfying holding or subsidiary of an enterprise satisfying above conditions. Any of the above condition is sufficient to call it as a level 1 or a level 2 category. So here also any of the above condition, if it is satisfied, then the enterprise becomes level 2. Even the holding or a subsidiary can be treated as level 2 category now. Level 3 we have already discussed. This is other than level 1 and level 2. So that means if your turnover is less than 1 crore, you are level 3 enterprise, less than or equal to. If your borrowing is less than or equal to 1 crore, you will be still called as level 3 enterprises. So they're just other than those. So there is no lower ceiling here. Even 0, 1 is also included as far as level 3 is concerned. So if you scale the organizations in the level 3 categories are all small organizations. Level 2 are all medium organizations. Level 1 are all called as large organizations or huge organizations. Exemptions are normally given to level 3 and level 2 categories. Level 1 categories, all standards are applicable. Level 2 and level 3 categories are called as SME. A simple word to define both level 2 and 3 categories. SME means small and medium enterprises. in Companies Act 2013, they will be referred to as SMCs. Because Companies Act is only talking about company, so he will not use the word enterprise there. So he'll call it as small and medium companies. We call it as small and medium enterprises because we are not discussing only about the companies. We are discussing about every possible enterprise which is covered under the accounting standards. Your Companies Act classification talks about SMCs and other than SMCs. SMC is small and medium companies, level 2 and level 3. Other than SMC is level 1 category. So if we can generalize and put it, we can say that the standards are applicable to any form of organization, proprietorship, partnership, whatever it is. And irrespective of the legal form of organization, my applicability is only decided as per those thresholds that we have seen for a turnover being 50 crores or 10 crores or whatever it is, something similar to that. Now, the problem arises when we discuss about one particular category of organization, which are called as trust. Now, if you basically not discuss about trust, I will say that irrespective of legal form, even the trust is included there. But I'm not talking about a private trust being formed, but I'm talking about a public trust being formed. Let's say the trust is a charitable trust, which is not favoring only a particular section of the society, but basically I'm just saying that I have a trust which is formed for a particular section. Like, I will say that, for the disabled, I have an organization called Swikar and Upkar. A Swikar Upkar organization which was basically doing something good for a particular set of organization, that society, that is disabled people. I cannot have a trust saying that, I will only favor those people who worship Krishna or something like that. That cannot be called as a public trust. For me, a charitable trust is basically those people who do not have any particular segregation on the basis of their religion or on the basis of their region as well. Here what I am talking about is a charitable trust which is simply saying that, let's say I am only for the upliftment of the beggars in a particular location or throughout India. So those charitable trusts are talking about. Now the charitable trust says, should I be included as in the ambit of the standards? The answer is absolutely yes. They should be included in the ambit of the standards. But since they are coming up with a particular public cause, so what we say is ICAI has given an exemption saying that any charitable trust is excluded from the ambit of the accounting standards provided. There's always a conditions apply. So one small condition which is put up here. So trust, if it is a charitable trust, excluded from ambit of accounting standards, provided the small conditions apply. Provided the trust does not involve in any commercial transaction even of insignificant nature. So however insignificant it may be, if it has done a commercial transaction, it will not enjoy the same exemption. Now what is this commercial transaction? Like we have taken the example of Swikar Upkar, those which are helping the disabled, and let's say we have arranged a particular music fest for which is being played by all the Swikar Upkar students. All the disabled students, those blind or whatever physical disability or mental disability they have, they have started performing in a music concert types. People have come down, people were seated, people were clapping there. But if at that point of time, let's say we required some water to be served there. Now such water, a person has gone to the shop, he has purchased some packaged drink water and he started serving them and he started selling them at cost to cost basis. 10 rupees for item, I've collected 10 rupees from each person and I've given the water. Can I call it as a commercial transaction? Still yes. Okay. Let's say 10 rupee item, I thought they were coming and clapping, so let's say I thought I'll bear 5 rupees of a loss. Let's say we'll collect only 5 rupees from each person, though the bottle cost what we paid was 10. So we were incurring a loss of 5 rupees per bottle. Now, is this a commercial transaction? Still yes. So basically in the sense what he says is, commercial transaction may result either in profit or loss. So commercial transaction need not always result in a profit. So when I use the word commercial transaction, such commercial transaction may result in a profit or loss. Or basically to qualify for the exemption, he has to give the water bottle free of cost. Irrespective of whatever you were charged while you are buying the bottle, but you are not supposed to collect any amount for the bottle which you have sold. So whenever you are talking about this, it may result in a profit or loss. Let's say again an issue cropped up. Totally number of bottles sold were 200. Per bottle I collected 5 rupees. I incurred a loss of 5 rupees. I just collected 5 rupees though the bottle cost was 10. 5 rupees collected on 200 bottles. Totally the amount collected was 1000. That 1000 also I went and purchased some gifts and I have given it to those disabled people itself. Those who performed very well in the concert, I have started distributing gifts and those gifts were given to those students. Now, can I call this as a commercial transaction? Because the proceeds from the commercial transaction were applied towards the purpose of the trust. The purpose of the trust was to encourage the disabled. Same thing I am doing. But there are proceeds from commercial transaction. He says that the exemption is not applicable. Because he will treat it as two transactions. The first one is a commercial transaction. The second one was a charitable trust transaction. So since you have done a commercial transaction which is resulting there, it could result in a profit or loss. I'll still say that you are not eligible to claim that exemption. So he says that proceeds of commercial transaction applied for the objectives of trust will not make the trust eligible for exemption. Sounds a little bit harsh, guys, because first he said it is excluded from the ambit of standards provided it does not do the commercial transaction, and such commercial transaction, even if it results in a loss also, I will say that you are not excluded from the standards. Even if the proceeds of the commercial transaction are applied for the objectives of the trust, I will still not give him the exemption, because there are two transactions which I'll segregate into. One is a charitable transaction, one is a commercial transaction he has done, other one is a charitable transaction. Since there is a portion of commercial transaction, I will not, the trust is not eligible to take an exemption. not religious. Yes guys, another issue which will crop up here is the standard applicable only to that commercial transaction or to the entire activities of the trust? Let's say the trust has spent about 100 crores in the previous financial year, has a commercial transaction of 10 rupees in that. Okay, so at 100 crores being applied for the purpose of the trust, having 10 rupees of a commercial transaction since it satisfies, I'll say that commercial transaction is applicable for the standard. Absolutely wrong. The entire 100 crores also. So when I say the trust, so if you do a commercial transaction, he's saying that the commercial transaction, if it is done, the entire trust is removed out of the ambit of exclusions. So it will come under the applicability of the accounting standards as a whole. So understand, when I use the word commercial transaction, standard is not just applicable to the only to that commercial transaction, but such exemption, now I will remove it for the entire charitable trust. So every transaction of the transaction of the charitable trust will come under the accounting standards now. Now when we do audits and when we talk about accounting, especially accounting policy, selection, we talk about some word called as materiality. In the sense, whenever we talk about materiality, immaterial items are never considered either while audit or while even selection of accounting policy. But when you see here, when you use the word insignificant nature, that means he's talking about even however immaterial it might be, I'm very concerned about that commercial transaction, and if you have done that, the trust might have done 100 crores or 1000 crores of charitable trust activity, I will still bring the entire 1000 crores within the ambit of the accounting standard now. Now materiality will not apply when you're talking about this case. Yes guys, so let's talk about what are the exemptions which are given to level 2 and level 3 categories. Now when we talk about the 32 accounting standards, the initial standards were majorly applied for each and every enterprise. But there are a few standards which are exempted either in full or in part for level 2 and level 3 enterprises. The first standard which is actually excluded in full for level 2 and level 3 enterprises is AS 3. Cash flow statement is applicable only for level 1 enterprises. AS 17, segment reporting, is applicable only for level 1 enterprise. Now in such cases, you will find that a few standards are applicable only to level 1, and in few cases we'll find that within a standard a certain paras are excluded for level 2 and level 3. Especially when it comes to AS 15, that AS 15, when we're talking about employee benefits, level 2 and level 3 are also included for the standard, but not for every para of the standard. A certain paras of the standards are excluded for the small and medium enterprises. AS 20 EPS, there are two EPS, basic EPS and diluted EPS. Basic EPS applicable to all, diluted EPS only to level 1. So basically you have a few exemptions wherever we are talking about. So as and when we are seeing the standard, we'll discuss about the exemptions when we are also seeing the applicability of the standard. So we'll see it with respect to each standard, guys. Let's not confuse ourselves anymore from here. This is just the applicability of the standard that we are discussing.